Welcome to the Supply Chain School Carbon Reporting webinar. My name's James Cadman. I'm your host and facilitator for the next hour or so to take you through this session. Hopefully you can all hear me. We have the usual chat function on the bottom right hand corner if you've got any questions or comments to make. My colleague Rosie is online as well, so if you've got any tech issues or anything else you'd like to raise, just pop that in the chat function. Just some house rules first of all. Do get involved with the polling questions. We're going to use pieces of a bit later on. I'll get to that. Do use the chat box, as I said, for questions. The way I run these sessions is that I'll collate all the questions at the end in case there's any common questions, common themes, and I'll deal with them at the end rather than as we go through. We have a feedback function at the end of the webinar, so please do hang on just to answer a few quick questions on your feedback of the session. That's really useful to us to help us improve these going forward and add in new content and new topics as well. And just so you know, the slides and the recording will be shared afterwards. They're put on the school website, so you can access the slides themselves, but also my dulcet tones should you wish to listen to it again, or likewise forward it on to colleagues who are unable to join the call. So if you want to take notes, by all means do, but the slides are available. Tech support, as I say, Rosie's online for any messages you might have or any issues via the chat box. The one additional piece of software we're using today is Kahoot. I'm sure many of you have got used to that now with lockdown and various other webinars you might have been on, or family quizzes. For those of you who haven't used Kahoot, it should look like this when you download the app to your phone. It's kind of purple with a large K and an exclamation mark. It's a very simple app available on the app stores for all the usual platforms, and it allows you to join in online polling and questions. We've got a few questions through the course of the hour just to keep you engaged in what we're talking about. So do download that now if you haven't. If you have it on your phone already, we'll tell you when you need to open it up. Okay, just to remind people, this is a beginner level. It's an introduction to carbon reporting. Hopefully you'll find it useful in the work that you're doing in your carbon reporting. So, an overview of the workshop. 4 main topics that I'm going to cover off. Why are we reporting on carbon? What is the global response and the UK response to carbon reporting? How should we go about reporting our carbon? And where do we get our data from to allow us to report on carbon? So hopefully a nice logical flow in terms of what we'll be covering. So the first of those, why are we reporting on carbon? Unless you've been living under a rock for the last 10 years, I'm sure you're aware of climate change and all the efforts that have been put into addressing it. Greta Thunberg, David Attenborough, and many other prominent figures are talking about this on a regular basis. This graph, this picture in front of you, talks about the global warming that has happened across the last 150 years since the Industrial Revolution. Global temperatures on average have gone up by about 1 degree Celsius, and this has been confirmed by ice core. This has been confirmed by measurements taken across the world. In some places, temperatures have gone up more than 1 degree on average. The further north or the further south you go away from the equator, the more that variance becomes. But on average, the difference is about 1 degree globally, which is significant. 1 degree might not sound like much, but it's very significant when it comes to weather patterns and the impacts that it has on nature, biodiversity, and our climate. Looking at this in a bit more of a longer term picture, we look at the concentration of carbon dioxide, the primary gas that leads to global warming, other than water vapor in clouds, but that's quite natural. So CO2 is a primary gas that leads to global warming. And if you look back about almost 1 million years, you'll see the concentration of CO2 in the atmosphere, which is what that y-axis between 150 and 400 is talking about, has kind of gone up and down on a fairly regular pattern, somewhere between 170 parts per million to about 300 parts per million. Where the number's higher, at 300, it means there's more carbon dioxide in the atmosphere, and it's generally a warmer period, a warmer period of weather and climate. And where the concentration is lower, then we'll have cooler periods, glacial periods. You can see a couple of things on there. We appeared as a species about 300,000 years ago, so this has been going on a long time before we came along. And on the right-hand side, you'll see what is often described as the hockey stick, because it's like a hockey stick that ticks up at the end. The concentration of carbon dioxide has shot up since the Industrial Revolution, and it's now well over 400 ppm. Just a bit of jargon busting, parts per million, ppm, simply means for every 1 million molecules or atoms of gas in the atmosphere, in the air, 300 of them, 400 of them are carbon dioxide. So a relatively small amount, percentage-wise, is carbon dioxide, but it has a significant effect. So what has been the impact of this? Well, we've seen it in the news lots. I'm sure I don't need to tell you. Forest fires in Australia that have raged, forest fires north of the Arctic Circle where they probably shouldn't be happening, bleaching of coral reef in tropical waters because of increased sea temperature and increased carbon dioxide in the water. Lots of flooding on the one hand in certain areas and lots of drought in other areas. So the bottom picture is the reservoir that supplies drinking water to Johannesburg in South Africa. That was under severe drought conditions for a long time, a couple of years ago. And then increased frequency and intensity of weather events like tornadoes, hurricanes, and so on. Not least the shrinking ice caps. There's a recent article a couple of weeks ago about the largest ice cap in Canada carving a huge iceberg off, and it's massive. It's a big impact. So what causes climate change? I've already mentioned carbon dioxide. There's 6 main areas, 6 main gases that cause carbon dioxide, and it's these that we will be reporting on. This is all leading into what we report on in terms of our own greenhouse gas emissions. Carbon dioxide is the most prevalent by far. Anything we burn, any fossil fuel, any biomass fuel will give off carbon dioxide, whether it's from transport or power generation. But there's some other gases as well that we need to be aware of, and they might be relevant to your situation. Methane, CH4, is the next one, and that comes from anaerobic digestion of organic waste, but it also comes from agriculture, from enteric digestion in ruminant animals like cows and sheep. So it's really important to the agriculture sector, but also the waste sector if you're dealing with biomass wastes. N2O, the next one down, nitrous oxide, you might recognize that as laughing gas or Entonox. It's also used as a propellant gas in certain containers, hence the squirty cream that you can see there. That has got a very high impact per kilo, per ton on climate change. So it's really important that people who use N2O for propellant gases switch to something different. Sulfur hexafluoride, SF6, is the next one down. This has an extremely large impact, but it's a really, really versatile chemical. It's a really good compound at insulating high voltage switchgear. So organizations like National Grid and others use it a lot for the protection and prevention of fire and safety when they're using really high voltage kit. And it's a relatively cheap compound, and it does what it needs to do, and it's not toxic to us. It doesn't dissolve in water, it's not flammable. However, it has a really bad impact on global warming. The next 2 sets of compounds, HFCs and PFCs, these are hydrofluorocarbons and perfluorocarbons. They're the refrigerant gases in heating and ventilation and aircon systems. Again, like SF6, really good at what they're doing at cooling down airspace, and they're not toxic and not flammable and so on. But if there are leaks of them, they can have a really high impact on global warming. These 6 were grouped together in the Kyoto Protocol that you might have heard of a few years back, and those are the ones that are the main focus for reducing our emissions of greenhouse gases and trying to stay within 2 degrees above pre-industrial levels, or ideally 1.5 degrees based on the more recent edicts. So we're going to move to Kahoot for our first question, so get your phones ready. The first question is, put these greenhouse gases in the order of impact. And there's 4 of them: carbon dioxide, methane, nitrous oxide, I think it was SF6 was the next one. What you'll see on screen is a 6-digit code. If you've never used Kahoot before, go to the Kahoot screen, and at the bottom you'll see a little square that says enter pin. Tap on that, enter 404883. Then it will ask you for your name, and I can see DC, Sal, Jess, Luke, Serena, and many others. And then you'll you should see this screen. And then when everyone's in, we will do the first question. Yeah, so we have 30, a couple of late entries. So Rosie's just going to set up the question for you. So in this one, you need to put them in the right order from left to right as you look at it on the screen. So on your phone, you should see some options, and you can place the order of the red, the blue, the yellow, and the green. And we're going from least impact to highest impact. So on the left or at the top, you should put the one that's got the least impact per ton of emission on the climate, down to the one with the largest impact. Okay, so the answers are in, and yes, the correct order is CO2, then methane, then nitrous oxide, then sulfur hexafluoride. As we'll show you in a second, the further to the right you go, the more impactful those gases are, and the more reason to focus on them for their impact levels. Cool. Okay, so thank you for that. If we switch back to the slide deck, please. Cool. Okay. So here are the answers. It's important to understand some of this before we get into carbon reporting, because if you're reporting not only carbon dioxide, but if you have methane emissions or nitrous oxide emissions, you need to understand the relative impact of those different gases. So this kind of bit of a jargon buster at the beginning is useful to help you understand that for when you come to reporting. There's a concept called global warming potential. And that talks to the concept that not all gases are the same, basically. Carbon dioxide is the most prevalent in terms of emissions that affect the climate, and it's being given a value of 1. There are no units, it's simply 1. So carbon dioxide has an impact of 1. So the relative impact of methane for the same amount, for the same tonnage or kilos emitted, is 25. So if you emit 1 kilo of methane, it's like emitting 25 kilos of carbon dioxide. And then as you can see, as you go down that list, the numbers get bigger and bigger and bigger. So when I was saying that sulfur hexafluoride, the fourth one down, is really impactful, if you released 1 kilo of that, it's like releasing almost 23 tons, 23,000 kilos of carbon dioxide. So if you're working in an environment that has sulfur hexafluoride, you need to be really, really sure that you're not letting anything out. Even a few grams will have a huge impact. The same in nitrous oxide. Starbucks used to use nitrous oxide in their propellant gas for their squirty cream, the picture above, until they realized how impactful it was. And as a propellant, it is all released from the can. So they use that information to change their approach to how they apply squirty cream to your favorite hot beverage. And then clearly, as you go farther down, you've got the HFCs and PFCs from HVAC units, from air conditioning units. If you get fugitive releases and a bit of escaped emissions from those that someone has to top up, that is impacting on climate as well. We use this concept so we can express all of our emissions as tons of carbon dioxide equivalent, and that's again important for reporting, because ultimately you'll be reporting a total tonnage of greenhouse gas emissions as tons of carbon dioxide equivalent. So you convert any emissions of methane, nitrous oxide, and so on into carbon dioxide using those ratios to give you tons of CO2 equivalent. So that's an important piece of jargon that you kind of have to know for reporting. Okay, moving on to the global and the UK response. I'm sure you've heard of the Paris Climate Change Agreement. It was actually 2015, it's coming up for 5 years ago now. It was ratified in 2016. a real big step forward. It's not legally binding, but each country is providing its own national level plan for how they're going to reduce carbon. And off the back of it came the IPCC's report about, well, can we restrict average global temperature rise to 1.5 degrees rather than 2 degrees to keep it below that. Even the USA, who are trying to pull out, or Trump's trying to pull the USA out of the Paris Climate Change Agreement, even with that, a lot of the states within America are adhering to it and carrying on because they have that autonomy. Even Syria as a country has signed up to the Paris Climate Change Agreement. So it has global recognition and importance. In the UK, you'll be aware that we have the UK's Climate Change Act. This was amended in 2019. It used to say that we're going to reduce our emissions by 80% by the year 2050, but we're now going to reduce them to net zero by the year 2050. And that means that on balance, by that time scale, in the next 30 years, we'll be emitting no carbon emissions through the lower carbon technologies, but also offsetting and greenhouse gas removal technologies. There's a slight differentiation in Scotland and Wales. Scotland can go a bit quicker because it has the economy, but also the availability of natural renewable energy sources. Wales is slightly different in the other direction because of the predominance of agriculture in the economy, but essentially we're all aiming for net zero within that time frame. What you unfortunately can't see behind that blue block is a graph that talks about how we're going to step down, the graph that's going to step us down from where we are now down to net zero, how we address all the different sectors and the technologies we need. So there's a 5-year action plan. Well, there are several 5-year action plans on how we're going to do that. Technology, changing the way we approach things, and reporting is part of that to keep track of that. Some of you might recall the Construction 2025 plan for our sector to reduce carbon emissions. That is another driver behind all of this. In that case, it was to reduce carbon emissions, greenhouse gas emissions by 50% by the year 2025. I was talking with some people yesterday, and it's still there. It's maybe been overtaken by what we're doing as a country more widely, but it's still a relevant plan and approach to reducing our greenhouse gas emissions. So onto the meat of the session. How should we report our carbon? What are the key reporting mechanisms? I'm sure some of you out there will be able to say there are other mechanisms, there are other routes, but for the sake of a lunchtime webinar, I focused on the main ones that are relevant to most of us. And I've bunched them into legislative and voluntary. And I'll take you through what these are. I won't apologise for the fact there's quite a lot of detail in these because these are quite involved reporting mechanisms. But like I said earlier, the slides are available and the recording will be made available as well if you want to go back and kind of revise what's going on as well. So this will give you an overview of what the different mechanisms are about, who's involved, who's captured by it, and the kinds of things that you need to report as well. But before we hop into that, second Kahoot question. Because there's another piece of jargon we need to understand here in terms of scope. So if you hop back on your phones for the second Kahoot question, and the quiz is, what does scope 2 emissions mean? What does it refer to? And there's going to be a few options here, one of which is correct, and 3 which are incorrect. So we're answering pretty quickly. Cool. Okay, great. The correct answer is scope 2 refers to your consumption of electricity. So when you pay npower, British Gas, wherever you buy your electricity of, Ecotricity, doesn't really matter. You will allocate that as scope 2 when it comes to reporting. And again, this is a piece of jargon we need to be aware of for reporting. It's not just the different global warming impacts of the different gases that you might be producing and emitting, but also how you allocate those into different buckets, and these buckets are called scopes. So if we flick back to the slides, please, Rosie. Thank you. Cool. So this picture talks about scopes, and there's a separate webinar that we run on scope busting, which goes into this in a lot of detail. But for the sake of this, I'm just going to give you a high level overview. Some of you might know this already, but for those who don't, there are 3 scopes when it comes to carbon allocating, carbon accounting. Scope 1 is anything that you as your organization own and control. So if you own the vehicles that do your deliveries, and you pay for the diesel that goes into them or the petrol that goes into them, that's your scope 1. If you have a gas boiler somewhere in your facility, or something that uses heavy fuel oil, and you burn that fuel yourself, that's your scope 1. So anything that you burn directly yourself and you cause GHG emissions, that's your scope 1. It also includes those fugitive emissions I mentioned earlier, so the hydrofluorocarbons that you might have in your HVAC system. If that's on your property and you control it and you maintain it, but there's a small amount of fugitive release, that's your scope 1 as well. So it's anything that you have direct control of and or own as well. And there's some more detail behind that, as I say, for another session. Scope 2 is where it's essentially your electricity. If someone else has provided you electricity, somewhere along the line they've burnt something on your behalf and put it through the transmission network, through the grid, and you've plugged something in and used that electricity, that's scope 2. It's indirect because you're not doing it yourself, but it's been hived off as being separate from the next category, scope 3, because it is so predominant and it's something that we all use so much. Scope 3 is essentially everything else. It's your upstream supply chain. So where you have business travel, in other words, someone else is driving a train on your behalf, or driving a taxi or flying a plane on your behalf, or any of the materials and products that you buy, whether they're capital goods or consumable materials, those come into your scope 3 because it's your supply chain. Again, it's indirect because you don't have control over it. And there's a similar thing with downstream. If you sell your product to a client and they use it, and through using it, they consume carbon, if they emit carbon through the consumption of energy, that's indirectly part of your footprint because you've given them those materials, those facilities, products to use. So that's part of your scope 3 as well. But as I say, there's a more detailed version of that if you need to listen to that. So onto the reporting mechanisms themselves. The first one, Streamlined Energy and Carbon Reporting, SECR. Some people say SECR, some people say SECR. I don't think there's a definitive yet. And that includes mandatory company reporting as well. So this took over from the carbon reduction commitment, the CRC. I don't know if any of you have got the scars on your back from the CRC. It was a very painful process. I supported many organisations with it as well. It was really arcane and quite convoluted. Thankfully, that was removed and the streamlined version has come in. Essentially, it's doing the same thing, but it's a lot more straightforward. It's a lot cleaner to understand how it works. It's been around for over a year now, so people should be reporting on it, should be starting to report on it for the year April 2019 through to the end of March this year. It's relevant to anyone who's quoted on the stock exchange, the London Stock Exchange, the European version, the New York or the Nasdaq. If you're stock listed there, then you have to report, and it builds on the mandatory greenhouse gas reporting that exists for directors' reports. What's different is that the Streamlined Energy and Carbon Reporting also picks up large unquoted companies and limited liability partnerships. So what they define as a large unquoted company, so someone who's not on the stock market, is if your turnover is £36 million or greater, and or your balance sheet is greater than £18 million, and or you've got 250 or more employees. So essentially it's the qualification for an SME business, but also for those who know the Modern Slavery Act, it's the same threshold for your turnover, £36 million. So that's the test to see if you're in on SECR. What it covers, the scope and the process, is it includes your scope 1 and 2 emissions from your activities. If you recall just from the last slide, scope 1 is anything you burn that you control and own, and scope 2 is your electric. That differs between quoted and unquoted. It's your global operations if you're a quoted company. It's your UK operations if you're unquoted, but fall within the threshold of the turnover and the employees. And it's those things for which you are responsible. So you own them, you control them. Scope 3 is also included for your business travel if you're a large unquoted company, where you purchase the fuel, because you might have travel reps, for example, in business. doing business travel, for sales and so on. You also have to report your underlying energy use. So it's not just the carbon emissions, but it's the energy, the kilojoules, the gigajoules that go with that as well, for gas, fuel, electricity and transport. So it's the two together, not just carbon, which is different from CRC. Some additional requirements, it's not just about the numbers. You also need to include at least one intensity ratio about productivity. So for example, most people will put emissions per pound of turnover, or you could do it per gross internal floor area, if that's relevant. Some handle of understanding the efficiency of your carbon emissions. You also have to provide the previous year's emissions, if available, and the intensity figures so that you can do a comparison. Are you improving? Are you getting better? You have to state your calculation method as well. Excuse me, the process by which you calculated your boundaries and how you undertook your calculations. There are many, many of them out there, but the two main ones that people refer to are the Greenhouse Gas Protocol, which is freely available to download, developed internationally, and then the equivalent ISO standard. They are comparable ways and both approved and accepted ways of calculating your footprint. You also then need to provide a narrative on the energy efficiency actions that you're taking. How are you actively reducing your energy consumption and your greenhouse gas emissions? And there's some examples there, including metering, efficient equipment, and so on. Training is important as well. Don't just think about equipment, think about the people side of things, the behaviors as well. You can fit the most efficient piece of equipment, but if people leave it on and crank the thermostat up, you've lost a lot of your benefits. Reporting cycles are annually. For the financial year starting on or after the 1st of April in 2019, and you report it in your director's report filed with Companies House. It's not a separate thing like the CRC was to the Environment Agency in this case. It's done alongside other reporting. There are a few exceptions and voluntary reporting options. So if you use less than 40 megawatt hours of energy per year, then you get an exemption. Or you can exempt yourself. 40 megawatt hours per year is not that much, really. It's quite a small amount of energy. It's only a few households equivalent, so it's quite a low threshold. The next one is important in subsidiaries. For those of you who've done CRC, you'll remember that if you're a smaller company, a subsidiary part of a larger parent company, you get kind of swallowed up in that and you have to report CRC, even though you yourself on your own are below the thresholds. With SECR, if you are below the threshold as a subsidiary, you can make a statement to say we are below the threshold and we may be exempt. You don't have to be caught up in the parent company process in the way that it was with CRC. And some of scope 3 is voluntary as well, as I said above. The key URL is there, should you wish to go and look at it. Okay, so the next one, Energy Savings and Opportunities Scheme, ESOS. This is called ESOS. No one calls it ESOS. It's ESOS. This one has come from the European Union. What's going to happen post December 31st this year? I don't know, but I would assume that it would stay in place because it's an existing scheme and it's established and it is providing benefits to all the businesses that partake. It's been around for about 6 years now. As I said, it comes from a European Union directive. The qualification is slightly different, so it's worth paying attention to this bit because it does differ from SECR. This is where it's more like the previous carbon reduction commitment. So you qualify if you're a large undertaking. So again, more than 250 employees, but the turnover is different. It's 50 million, not 36 million. Sorry, 45 million pounds, not 36 million pounds. It's 50 million euro. And the balance sheet number is different as well. So there's different qualification criteria here that you need to look at. Like CRC, the qualification does include you if you're part of a larger organization that meets the above criteria, and it's that higher parent company. They will act as a responsible undertaking. So you will, if you're a small subsidiary that wouldn't on your own comply, within this you do get sucked up into the greater, into the mothership in effect. So that's how it differs again from SECR. If you're an overseas company and you've got a UK registered establishment, again, you are included because you fit the criteria. You're registered in the UK, and if you have more than 250 employees, then you get included. ESOS is a bit more involved. It's about understanding where the energy opportunities lie for reducing your consumption. It's really about auditing and understanding, well, there's an opportunity here, there's an opportunity there, let's put a plan in place and do something about it. So the process is that you calculate the energy used by your assets and activities for which you're responsible. Again, it's scope 1 and 2. So if you're responsible for how you run your buildings, your facilities, your depots, how you use your fleet and your vehicles, then that's included. And you gather data over 12 months, and you analyze for energy consumption. What is the absolute consumption, and where are there options for being more efficient? You need to cover at least 90% of your consumption. So there is a bit of a de minimis there. You don't go after every last single kettle or microwave that you might have on your site and on your estate, but you cover, the big hitters and understand where the predominance of your energy consumption is. The next stage, when you've got that, is to identify options for reduction that are practicable and cost effective to implement, part of which is understanding what the whole life cost benefit is, how much you're going to save for the investment put in. You can do MAC curves for those who are into the economics of this. The idea being that you understand where the biggest bang for your buck is in terms of putting in more efficient equipment, or training your staff, or changing your fleet to electric vehicles, for example. Where are the options, and what are they going to cost, and how quick are you going to get that payback? Because the idea is that we're not, the people who devised ESOS are not trying to put people out of work and out of business. It's clearly there to make people more efficient, both in terms of carbon and financially. There's some key governance you need to include as well in terms of appointing a lead assessor to carry out all of this, and that includes site audits. So there is someone walking around with a clipboard, in effect, understanding where your consumption is and what you can do about it. But there's a kicker in this. There's no regulatory requirement to actually implement the opportunities you've identified. So you can go to all this work and identify some great opportunities, but there's no compulsion to follow them up. I think organisations would be foolish to not follow through on this, but there is that option that the legislation, the regulation, doesn't force organisations to act on the report that comes from their lead assessor. So bear that in mind. Okay, a bit more on ESOS. This has got a different reporting frequency to SECR. It is every 4 years. We're currently in the 3rd compliance period, which was from December last year, the 5th of December, through to the 5th of December 2023. So it's done over a longer period, so you can smooth out any peaks and troughs in production and in the way that you work. The way that you report is you provide a notification of compliance online to the relevant environment agency to your devolved administration. Either the Environment Agency in England, or Natural Resources Wales, SEPA in Scotland, and the Northern Ireland Environment Agency over the water. So you lodge it with the local Environment Agency. Importantly, some fines can be imposed. I'm just going to get my slides up so I can see what those fines are again. There are some quite chunky fines if you don't report, which again is similar to the way CRC was. There were some quite hefty fines and sanctions available for those who didn't report, or misreported, or misled, and so on and so on. So, for example, a failure to notify that you're participating is up to £5,000. A failure to maintain records is £5,000. A failure to undertake an energy audit, so getting your lead assessor to come on site and do the audit, do the sums, do the opportunity assessment, that can be up to £50,000. And there's some others as well. Misleading statement is another £50,000. So there are some quite heavy sanctions, and the first of those have gone out maybe a month or two ago from the Environment Agency. They were sent out to those organisations that were falling short, shall we say, on some of the things that they should have been doing. Okay, that to one side. There are some exceptions here. Like with SECR, there are ways of proving compliance or not getting involved. If you have ISO 50001 energy management standard, then you automatically comply with ESOS, because effectively it's the same thing. It's understanding what your energy use is, it's understanding where the opportunities are and hotspotting them for reduction, and then putting a plan in place. It's a fairly logical process. The ISO standard kind of enshrines how you would do that. ESOS enforces it. In that case, you just need to do a process of informing the Environment Agency to say, we already comply. You don't need to go through it again. And likewise, if you have display energy certificates in your buildings, then those will help towards it. They won't give you full compliance, but they will help with some of that that process. Okay, so that's the legislative side of things. I'm just going to take a slurp, and then I'll get on to the voluntary. So legislative, there's a compliance piece. If you fall under the qualification criteria, you have to report. And getting your plans in place to do that is really crucial. So you've got the right people who are gathering that data and the right stakeholders internally as well, because not one department will have all that data in most examples, in our experience anyway, that there will be many people you need to speak with to get the relevant information. Voluntary reporting, by its very nature, you don't have to do it. But saying that, there are many clients out there who are going to their supply chain saying, we'd like you to participate. It'd be really good if you could join in with CDP or science-based targets, for example, and support us with what we're trying to do. So voluntary is used with a pinch of salt. Okay, CDP used to be known as Carbon Disclosure Project. Many people still call it that, but it's officially now CDP. They are an organisation, a consultancy, I suppose, whose purpose is to help push towards a lower carbon world overall. That's their vision, their mission. So they gather climate change from large organisations and investors to describe what people are doing about climate change. How can they understand what's happening now and what's going to happen in the future? How can we manage our risks? Where are the opportunities to move forward on this? At the core of it, there's the same old kind of reporting mechanism. You use something like the greenhouse gas protocol or the ISO standard I mentioned. You gather your data and you report on your scope 1, 2, and 3 in this case, depending on the kind of submission you're doing. So again, it's the energy and carbon that you can control, the electricity you use, and some of your supply chain, value chain emissions as well. This is a lot more detailed, though, than some of the legislative reporting. It's not just the carbon numbers. As you can see in that sub-bullet point there where it says risks, governance, business strategy, targets, there are a lot of questions in there. The questionnaire itself runs to over 180 pages. It asks for a lot of information. And there's a little cottage industry around gathering all this information on behalf of organisations. There's a lot in there. So it's the wider strategy. It's the approach to carbon more generally, rather than just the output of the numbers. You're meant to disclose annually. There is a sectoral approach for the construction sector. So it is tailored to the sector and the idiosyncrasies that sector has over retail or food and drink, for example. And it makes explicit links to other mechanisms and platforms such as the Sustainable Development Goals, science-based targets explicitly. CDP are part of the Science-Based Targets Initiative. And also on the kind of investor side of things, the Task Force on Climate-Related Financial Disclosures. There are many bodies out there who take an interest in what people are reporting on their carbon, whether it's investment, whether it's because they're suppliers, whether it's because there's a wider stakeholder reputational piece. A lot of interest. Okay, Science-Based Targets Initiative. As I've just mentioned, it's a partnership. It's a CDP are involved, but in a partnership with the UN Global Compact and the World Resources Institute and the WWF as well. So they're all working together, and it's essentially a calculation method for how any organisation can set a trajectory and a target that's in line with the Paris Climate Change Agreement. So we're all trying to get to net zero by 2050. What's the route we should take? What's that graph coming down, that trajectory, and how can we set a reduction process alongside that's in agreement with that, and identify along the way opportunities where we can reduce our carbon, whether it's through technology, behavior change, changing the way we do our business, and then it's reporting it to our clients. So the actual the nuts and bolts of it are you select a suitable trajectory pathway, and there's two there, one called absolute and one called sectoral. So the absolute is for your organization, how can you do that yourselves, and one is sectoral, so you take an approach for what can the whole sector do. And a few sectors have got these. Not every sector's got one developed, but construction has, the built environment has, about how we as a sector can come down in line with the Paris climate change targets following the SBT method. It covers scope 1 and 2 emissions again. Interestingly, it covers scope 3 emissions if your scope 3 accounts for 40% or more of your total emissions. Now, in most cases, most people's scope 3 emissions count for way more than 40% of the overall carbon emissions that you make. In the construction sector, I've heard figures in the line of scope 1 and 2 is 1% of our overall carbon emissions, 99% is our supply chain, our suppliers, our downstream products. So they are reporting on everything. At the best, it's probably 80%, but it's normally higher. Once you've got your trajectory, you develop a plan to hit your reduction target within a 5 to 15-year time frame, which you can choose yourself on how quickly you can go, and the actions you're going to take to reduce your carbon. Again, reporting is annually, and you provide that to the Science Based Targets Initiative, who will sign off on that and say you're still adhering to your trajectory, and then you can use that with your clients as well, and provide that information to them. So these things are all similar, they're all linked, but they all have a slightly different angle in terms of the audience and what they're trying to achieve. Okay, last but not least, the Supply Chain Schools Climate Action Group. So this is a special interest group that we have within the school, and like all the others, our purpose, our mission, I suppose, is to reduce carbon emissions across the supply chain, but we're taking a two-pronged approach. We are using a piece of software, a performance tool that will help capture the data on the emissions so we know the scale of it and where the hotspots are. But then we'll also provide the learning, such as webinars like this, but also the e-learning and all the other materials that you can find on the school to help improve competence and skills and knowledge around where and how to address carbon. And then ultimately we'll be looking at identifying where the hotspots are, which sectors are maybe not doing quite so well, which trades need a bit more support, and how we can work towards reducing our carbon. We're covering scope 1 and 2 emissions because most people can get a handle on that in terms of their data. Scope 3 emissions come in where we have organisations that are very material intensive. So if they manufacture products and materials, they will be asked to provide their data as well on the scope 3 emissions for that. As I say, we've got a tool that does all the maths for you, does all the conversions, and we provide guidance and support on that as well. And the reporting frequency is every quarter. We thought that annually was too or not frequent enough, and monthly is too frequent. So that's an initiative we've got in the school. So that has been a fairly quick canter through some of the key reporting mechanisms on carbon. As I say, there's quite a lot of information to digest there. Like any reporting mechanism, they're not straightforward. It takes a bit of time to digest. So hopefully that will give you an overview of the different issues, particularly around qualification, particularly around the timeframes that you have to report in, who you have to report to. Like I mentioned at the beginning, the slides and the recording are available. So if you want to go back and check things, by all means do so. They're there. They'll be put on the website, so that's fine. But for the moment, we'll switch to Kahoot and we'll do our next question, please, on which of these mechanisms people already report to. So I believe this one's a multiple choice. So if you know your organisation already reports to SECR or ESOS or any of those voluntary mechanisms, or you don't know. Just be interesting from my point of view to know what the mix is. Excellent. Okay, thank you very much for that. Thank you for joining in. So some of you report to SECR and ESOS, but the vast majority of you don't know. So obviously something to go and find out, see if it's relevant. I'm sure if it is relevant to your organisation, someone somewhere will be on top of it. But if they're offered a helping hand, I'm sure they'd be very appreciative of that. Great, thank you, Rosie. If we flick back, and for the final 15 or so minutes, I just want to take you through a little bit about where you get data from. So we've talked about the different impacts of different gases and the fact that they're not all the same. We've talked about the fact that there's different reporting mechanisms and how you deal with those. Talked a little bit about different scopes, so some of the jargon within reporting, scope 1, 2, and 3, and how you differentiate where those carbon emissions are coming from, who's emitting them. But behind all that, you've got to actually go and get some data from somewhere. So for the next few slides, I'll just talk about where you get your information from and how you bucket it up into the different scopes. So you know the kinds of things that you'd be expected to go and get information for. So where do we get our data from? This graph, this picture, sorry, talks to the different areas where your data might come from. So if we focus on the middle one, your business, on that one, excuse me, I'm just going to do something on my screen up here. You've got, this is the scope 1 emissions yourself. So your own vehicles, your own buildings, any plant and equipment that you own yourselves, your HVAC systems and so on. That's your direct business footprint. That's scope 1 and 2. If you look to the left with your suppliers, this could be called your embodied carbon. So if it's in a material that you buy in, like timber, steel, concrete, there's an embodied carbon in that. Some people call it a capital carbon in terms of the embodied carbon, or cap carb as to shorten it even further. That's often used in the infrastructure sector, but that's applying to the materials and the products that you're buying and installing and fabricating. And that's generally your upstream scope 3. Your other indirect, your suppliers, you can also look at your utilities suppliers as providing you a service as opposed to a product. So your waste contractors, your water company that provides you your local water supply, they're also part of your scope 3. As you heard me say earlier, electricity is seen as different, grid electricity, so that's scope 2, but it's still indirect emissions that are done on your behalf by one of your suppliers. So npower, SSE will be one of your suppliers in effect. And then looking to the right-hand side, you've got your client, where you sell your product or your asset or your facility, your building, to your client. And that is downstream scope 3 indirect carbon. And that's sometimes called end user carbon or use carb. And it's all the emissions from running those facilities and buildings that you have taken part in constructing for a client. So there's a thing there about understanding where your boundaries are. What are you liable for? What are you in control of? What do you own? And what are you going to report? And then comparing that to what the regulations, the reporting regulations ask you to report. So having a picture of this for your organization is really helpful. What do we own and control? What is in our supply chain? There's electricity, there's waste where necessary, and then there's also all our clients as well. Sources of data, yes, covered a lot of these already, and here's just a few examples, but the most common examples of where you're going to need to get your information from. And just think about the kinds of people you're going to have to speak to. Electricity and gas, that might be through the bills that your accounts payable team get, or your procurement team if they buy electricity and gas ahead. Staff and business travel could be through an HR function, could be through a travel agency that you use to book business travel on your behalf. Materials could come through a SAP system or an enable-on system with your procurement team. Water and waste, a bit like electricity, you'll have utility bills. Capital goods could likewise come from your procurement team or your estates team. So there's going to be different internal stakeholders who own that data or who have access to that data. So having an understanding of who is going to provide that information to build that bigger picture is really useful. No one person or no one department will have all of that in our experience. There's probably some other things in there as well that are relevant to you, in your particular situation. Think about different kinds of data as well. It's rare that someone will come along and say, exactly what you need. Here's the kilowatt hours of energy we used. Here's the litres of fuel we used. Sometimes it's a bit more convoluted than that. So yes, you can get direct real data that you're looking for. So meter readings for your energy or your water, that's a really useful direct way of doing it. If you know exactly how many tons or meter cubed of a product you've bought, that's really great. Doesn't always work like that. Sometimes you'll only have the amount spent, for example. So you'll have to use proxy data and work back. The most common on that is fuel data for business travel. You'll know that you've spent so many pounds on diesel, for example, at the pump through fuel purchase cards. And you can work back from the average price of fuel to how much fuel you've actually used based on the price. And similarly with some of the other products that you might buy. And then the third option is to do a sample of data. You might not be able to get all the data for a whole year, but you might be able to get some kind of survey for a couple of months of the year, or for one site compared to all your sites, and then you can scale up. You can extrapolate based on that. The main thing, as long as you state what you're doing and how you've done it, what your assumptions are, then that's good, because not all data is available exactly as you'd wish it to be. Also think about the relevance and accuracy of your data. Is it up to date? I mean, these seem like obvious things to state sometimes, but it depends on who that data is coming from. Is it up to date? Is it relevant to your situation? Is it even biased? There could be something in there that a supplier's giving you some information on, and you think, well, is that actually true? And also think about the control and influence you have. Think about your time constraints and how much you can put into this. It's the 80-20 rule to some extent. And we saw that reflected earlier in terms of the ESOS, where it's 90% of your energy consumption is what's included. It's the same approach here. Think about what you need, what you can do in terms of accuracy, and the extra accuracy you'd get for going that extra mile. Very briefly, the Greenhouse Gas Protocol is a very good document to understand how to go about doing greenhouse gas reporting. It covers those 6 greenhouse gases I mentioned at the top, from carbon dioxide through to HFCs and PFCs. It gives you a standard approach and method, and often you'll be asked to state which method you followed. You'll have seen it in some of the other ones where it says Greenhouse Gas Protocol or the ISO 14064 standard, saying that you followed this and you've done your allocation based on this standard is really important to do. So this is the one that most organizations use in our experience, and it'll give you that consistent approach for accounting and reporting. I'm not expecting you to read this slide by any means, but when you come to refer to this later, there's a lot of free information out there to help you do this, to do all these calculations. The first couple of bullet points are conversion factors. So those are the things, those are the numbers that help convert you from 1 litre of diesel. What does 1 litre of diesel mean in carbon dioxide? How many tons of carbon does that equate to? The DEFRA conversion of factors are free. They're available on their websites. They get updated every year. They will give you that accepted data, emissions factors, conversions factors, they're called, to convert a kilowatt hour of electricity, a litre of diesel, so on and so on, into the equivalent amount of carbon dioxide. Similarly, the Bath inventory of carbon and energy is more around materials, converting what a ton of concrete equates to in terms of kilos of carbon dioxide or tons of carbon dioxide. And then there's many calculators out there that have kind of been pre-populated with this data that you can just plug in what you've been using and how much you've consumed, and it'll give you the carbon dioxide number. There's a few examples there. There are many others out there. Some are free, some you'll have to pay for. I very much recommend you go for a free one first before you put your hand in your pocket, because much of the underlying data is free, but there's many of them out there. So have a look at those later if you need to get some basic raw data. What have we got next? And then just looking at this a little bit more widely, it's not just about reporting for compliance. That's clearly the primary aim for some of this. But there's some other drivers here as to why you should be thinking about your carbon and energy consumption. Carbon emissions and energy consumption are clearly costly, so there's financial savings that can be made if you become more efficient and leaner with your operations. If you go through an ESOS audit and you identify those opportunities to put in more efficient equipment, and it's cost effective as well, importantly, then do it. You'll get that reward, that payback will come through. You'll be less reliant on energy, so you'll have a security of supply as well there in terms of energy. And reputationally, you'll stand in good stead with your potential clients and your stakeholders, shareholders as well. Because you're thinking about carbon, you're thinking about being efficient, you're thinking about net zero, and that can lead to better work winning as well, where relevant. So there's lots of good reasons for doing this beyond just compliance as well. But of course, you need to have accurate data beneath all of that. Cool. So that's largely it for now. This is the main resource that we're highlighting. In our Lunch and Learns, we're now referring to one key resource. When you get the slides, you can click on the View Now web link, and it'll take you to the government's reporting guidelines document. It's fairly chunky, as you'd expect from a government reporting piece of literature, but it has all the information in there on SECR that you might need. It goes into the detail of what I've been presenting today. It's a good way of dealing with insomnia on one level. So just to remind you, please share your feedback. You'll see that a link has appeared at the top of the screen in the green banner. Like I said earlier, it's really useful for us to understand feedback, what else we can deliver for you through the school, and what other topics are interesting, as well as this particular one itself. So thank you very much. I'm going to have a look at the questions and see if I can deal with some of those as best as I can. Let me have a look at those. So just please bear with me while I read those. So a question here about verification of certification of a company's carbon footprint. There are services out there. People will do a verification exercise for you, and they'll data check, is the data robust? Is the sample size good? There are many organizations out there. Carbon Trust do this particularly for carbon. There are many others out there. If you search for carbon certification consultancies, you'll find many of them available. But as I say, Carbon Trust are probably the most widely known in this space. But many of them will do it. The big four will do it, but they'll charge obviously quite a lot for it as well. Okay, so yes, this question we get quite a few times. Employees doing business miles and claim back fuel through expenses in their own cars or cars that they've purchased through a cash allowance they receive, is that considered scope 1 or scope 3? So business travel is considered scope 3, but that's essentially where you are paying someone else to drive the vehicle for you. So a taxi, a coach, a bus, a train, a plane, someone else is doing it for you. If you're in control of it, so if it's a company car, in effect, then that's generally scope 1. So you are in control of what fuel is used and how that fuel is used. So that would come under scope 1, whether it's their own car going on business or whether it's a company car. Particularly a company car, because then the company owns that car in the way that they might own a fleet vehicle. This is a good one, and this applies to action sustainability. How would you calculate your scope 2 emissions if you rent a floor in a block of offices which include energy costs in the rental amount? That is a tricky one. You can often do it by square floor area. So if you know the overall energy consumption for that block and you know what your square footage is compared to the overall square footage, you can do a ratio and make the assumption that if everyone is doing office activities in a similar fashion to you, that's a good first starting point. That would be a useful approach to take. If you need to get more accurate than that, then you'd need to get to a sub-metering level and speak with a landlord about, is there a way of putting a sub-meter on the electricity input into your office area. Other than that, though, if they've just got 1 meter for the whole block, it's just doing it as a proportionate approach via square footage. So a question here on SECR. What should you report if a small UK trading company, but 100% wholly owned by a global organisation? So if the global organisation is headquartered outside of the UK, it falls outside of the regulations unless the UK part of it is actually registered in the UK and has more than 250 employees. So if it falls over the threshold for the qualification, then it would be included in SECR. So the turnover and the population, the employee population. But by saying small UK trading company, I'm assuming it's less than 250 people, so it wouldn't comply. So done with that one. Okay, can companies utilize carbon capture to reduce their impact? It depends what you mean by carbon capture. I'm assuming people are alluding to offsets in that question. When you report carbon and impacts, there are 2 ways of doing it, which was not the purpose of this webinar, but happy to talk about it now. Is that you report the energy that you consume and the emissions from that using a grid average emissions factor. So you plug in and you use the electricity that we all use, and there's an average factor for the whole of the UK for that. If you've got a system whereby you are managing to do something to reduce your emissions, you've got offsets somewhere, you can report 2 kinds of figures within that. So if you're buying a green tariff, for example, off your energy provider, and they somewhere have used renewable energy, you can report a lower figure alongside the average figure that can demonstrate that you're taking action to reduce your carbon impacts. And the last one I'm going to pick up on is, do you ever see this becoming an audited measure that Companies House would require? I've had no indications of that about the auditing side of things. That would be for the regulator to pick up on. So in the CRC, for those who've been through it, there was a process where the Environment Agency would check data and would pick up on where they felt things were being reported inaccurately. I've had no indication of that in this process, but I wouldn't be surprised if things change. The reporting landscape never stays still, really. So getting that kind of accuracy is important for a compliance point of view. But it's also important, put the compliance to one side, it's also important, in my view, for understanding where you're actually at in terms of your energy use and carbon for those other issues I talked about cost savings, lean and efficient, about looking good with your clients and your stakeholders. Compliance is just one part of that. Okay. I'm going to stop there because we're at the hour. Thank you very much for listening. I hope that was useful and I got through a fair few of those questions. If there are any more, do feel free to get in touch. And finally, if you could complete the feedback form, that'd be great. I think you just click the red button at the top and that'll take you there. There's a few radio button questions. Other than that, thank you for listening and we'll see you all soon. Thank you.